Kabir, maybe you can start us off. You head the Southeast Asia team over at B Capital. You've spent over 2 decades looking at investments across fintech and software globally. How are you seeing the venture investing playbook evolving as we move forward? Is there a new investment regime?
Olivia, thank you. I do think it's a bit of the best of times and the worst of times. I think I'm a glass half full person, so if you think about the dark clouds, I think it's started to see that emerge globally, even 18 months back, starting with the public markets, and I think private markets started to follow quite rapidly, the US, and then flowed through to kind of Asia. And I think that's, in a way, we are, like you said, we are entering a bit of, I think, a new investment regime. I think the 14-year period of the low declining interest rate environment, that's really changed. I'm not a forecaster, so I don't want to try to forecast, but unlikely you'd see those kind of low declining interest rates. I think we're now in a high interest rate environment. You're also seeing, at least globally, inflation being a key challenge. I think it's much less so on a relative basis here in Indonesia, but it's globally a key challenge. And I think you did see, unfortunately, a lot of businesses that were built for the bubble. The key is, are they going to be built to last? I think that's something to really think about. But I do also think it's the best of times in the context of, it's quite interesting to see how some of the entrepreneurs are thinking about profitability. Rohit and I sit on a common board of one of our portfolio companies, Kopi Kenangan, and we're speaking to them and others. But it's just interesting to see how entrepreneurs are adjusting to this new reality. I think interesting to see how innovation still continues, right? We talk about AI, I think that's a moment in time, and how do companies take that up and evolve from here. I think that's going to be quite interesting. So I do think it's short-term, a lot of headwinds, but long-term, very optimistic about tech, long-term, very optimistic about Southeast Asia. And it's more about how do we come together to make the most out of it.
Yeah, very nicely said. I mean, Rohit, let's come to you right now. You've spent over 8 years, at Sequoia, now Pick 15, leading investments into this region. I think, Kabir, you talked a little bit about profitability and, seeing the long-term potential of Southeast Asia still going strong. I mean, Rohit just raised the $850 million fund dedicated to this region last year. How are we seeing this money being meaningfully invested? Are there areas or stages that you're looking at specifically?
Yeah, we've always been an early stage investor. So even in some of the largest companies in the region, like Gojek, Tokopedia, we were fairly early investors, and we don't intend to change that playbook. We hope to invest this fund across stages, but our partnerships with most companies will start in the seed, Series A, Series B rounds of those companies. So say start with a $5, $10, $15 million check, but we are happy to support and partner with founders over a long period of time. So often we invest with companies and invest in multiple and subsequent rounds. So we hope to invest this capital with the same playbook that we have followed. I think one of the things which is going to be differentiated about this vintage of companies is that more companies will look to compete with their product, look to compete with their people, with their strategy, with profits, versus just raising more and more capital. So I think Kabir touched upon it. It's the mood in the room. I think we will see a lot of companies from this vintage actually be very good investments, build into sustainable, enduring enterprises, and do that very efficiently. So we're looking forward to partnering with companies that have differentiated products, that have outstanding people leading those teams, and that are focused on the region.
Yeah, nice. Yeah, I think, they say that in the downturn, maybe it's the best time to be investing, right? Best time to start a company. Carmen, I want to go to you now. You've worked with actually both government-backed initiatives as well as in private funds. Now with Vertex, one of the first few investors in Grab, you've built a name as a very dedicated, helpful, and consistent investor. How do you discern which companies are good in the marketplace right now? Are there any metrics, like Rohit mentioned, profitability, product focus? What are the metrics you're looking at right now?
Yeah, so thanks for the question, and good afternoon to all. So for us, when we look at companies in today's time and age, honestly, there's actually three things that sets companies one apart from the other, right? So one will be that the company needs to actually define their moat. But in this time and age, when money is scarce, investors are slow, what do the companies need to do? The companies need to be nimble enough to pivot to something else that actually puts bread on the table. So it requires courage of the founders to actually push back on some of the investors or board members' requests that they maybe got to grow, or why are you pivoting to something that's not your core? So that speaks about the founder, the next thing. Founders also need to have a lot more courage. Great founders stand out in this time. Why do I say that? Great founders took efforts to hire the right person. And what have we seen lately? We've seen massive layoffs. What does that mean? That means companies will have to remove the resources that they have so carefully picked and chose. For great founders, what they can actually do is, where possible, retain all the people, but they will need to be very creative. That means to say they'll probably have to do job sharing, job shifting. You come in a few days, they'll come in other days, so that everybody continues to have a job. And when the market turns around, they are going to be the first off the gate. So that's second. The third one is, again, founder, right? It depends on the founder. Have to be courageous enough to know that this is 1 year where my revenue will be flat. And they can stand in the face of criticism that your revenue is flat. And that's because they are focused on driving themselves into EBITDA positive. So I think this will be the type of people that we will look for.
Right. Courageous, very creative, resourceful even. Yeah. Fundraising, that's become so hard for founders this year, right? The environment has changed so much over the past 14 months or so. What do founders have to do to kind of position themselves for a better shot at navigating this climate? Rohit, maybe you want to jump in?
Yeah, I think I'll again go back to the point which I was making, that founders have to demonstrate how are they going to use this capital beyond just marketing or subsidies or taking market share away. I think this is the environment where, in general, across vintages, people have always wanted to back innovation, have wanted to back original ideas. And I think more so in this environment, because it's very hard to raise capital trying to replicate a playbook that has worked in another part of the world, or replicate an idea that's raised capital in other parts of the world. That's been the trend over the last few years. But I think a lot of capital will go towards founders and entrepreneurs that are solving problems that are authentic and genuine to the region. We are privileged shareholders in companies like eFishery and Kopi Kenangan, and I think all of these companies that have products that are unique to the region or ideas that are unique to the region are continuing to find capital. eFishery just announced a large fundraise. So I think the playbook of building companies which are borrowed ideas or inspired ideas, I think that's going to get harder, because the information arbitrage to copy ideas or build, replicate ideas, etc., is getting shorter. So more people get to the same idea sooner, faster. There's a lot more capital that was available to pilot those ideas, which is not the case anymore.
So new categories might emerge. Okay. Talking about categories, I think some categories are more exciting than others. A lot of people I've spoken to recently tell me that generative AI is going to be a watershed moment for technology. Kabir, I want to jump to you to this one. How are you thinking about investments in this space, and how are you preparing your portfolio companies to leverage this technology?
That's a great question. I'm also smiling because today early in the morning, I was chatting with one of my co-founders on exactly this point on AI. And I think there are 3 dimensions there. And there's one dimension on, how do we invest in AI? So I'll come to that. I think the second dimension is, what do our portfolio companies do about it, right? So we have 150 companies in the portfolio. What do they do about it? I'll come to that part. And third is, we've been talking a bit about what do we as a firm do internally to think about AI, right? Now, let me just talk through each of those 3. I do think AI is a bit of a moment in time. I think people have said it more eloquently, and so I'm just rephrasing whether it's a combination of the Industrial Revolution or if it's bigger than fire. I think all of those are great analogies. I think it is a moment in time. I do think it's one where people often ask, who do you think will win? The answer is, I don't know. But I do think the elements that could make someone win is, do you have access to data? How do you leverage that data in interesting ways and work on that? I think those are interesting parts. The reality is whether that's incumbents who do that better or startups that do that better depends on who kind of plays that out and how that plays out. I think there's a wonderful book written about 160 years ago. I know Rohit's passionate about history. I learn a lot from history. It was written about the human species, but I think it's relevant for tech and AI, which is, it's not the strongest that survive, it's not the most intelligent that survive, it's the one that's most adaptable to change. And I do think it's the same. It's not like the incumbents that will thrive, or it's not necessarily the tech startups will thrive. It's the ones that are most adaptable to change. It's the one that use their data in unique ways to target, whether that's customers in a very personal way. So I think that's one part on the AI part. How do we invest in some of the winners? The second is on our portfolio. We are thinking about things more deeply, like what do the portfolio companies do internally to kind of either optimize processes, to target customers better. I think there's a whole bunch of things that you can do. Third, we're talking about it is, as an investment firm, what do we do about it? Like, how do we think about processing information? How do we think about even our investment memos? Can some part of the investment memo, at least the first cover, be written through AI? So I think there's some really interesting ways. It's a moment in time. It's just about who leverages it the most effectively.
Yeah, good point. Okay, I want to talk a little bit about dry powder as well. All 3 of you are managing huge funds. The public markets, I think, unlocking that dry powder further is also going to have some way to do with how the public market is doing. And it's looking a bit uncertain right now. We don't know how long this uncertainty is going to last. Do you think folks in VC should try to keep more of that powder dry for a longer period of time? Carmen, do you want to start first?
Yep, happy to. So IPO is still part of the journey. It's not the destination, right? So, which means that companies are constantly fundraising. It's interesting because I was talking to somebody and they were opining about, IPO is great. And I'm like, actually, IPO is great. Small companies, big companies, large companies are all fundraising all the time. Either they raise money from issuing equity, or they do bonds, or they do debt. It's always that. So if the public market is quiet, not opening, or very soft, then deserving companies will still need to raise money in other ways. So then it's about either you conserve and leverage to raise more money, or you have to go back to existing shareholders like us with very clear deliverables on why you need that money. And of course, this is a time when investors sitting on this side actually have the power to leverage. So if your company does well, then okay, great. If a company doesn't do well, we could have a lot more rights to do an M&A. Having said that, Cento did a research in 2021, and they were looking across Southeast Asia companies to identify what is that form of exit. Because most of investors will look at IPO as an exit. And they found that in Southeast Asia, other than those that went public like Grab and Booker, most of the other transactions were either trade sale or secondary. And trade sale actually has a little bit more transactions. So when I look at today's scenario, I do anticipate a lot more trade sale, right? And a trade sale out of convenience, so to speak. Yeah.
Kabir?
I think these And we've looked at the data as well. I think points raised on IPO, trade sale, secondary sale. I think 2021 we did see several IPOs that took place. It was a good year. I think you're starting to see that market's really shut down. I think it will open up. It will open up kind of in the future. I think it does require the ecosystem here does require a bit more of, I guess, working with strategics to encourage that M&A starting to happen. I look at some of the data, both India and Southeast Asia. If you look at the last 15 years, in India, you've had about 200 M&A exits. The average, if you kept like Flipkart and all aside, the average is about $200-300 million, right? And if you look at Southeast Asia, you've had about 60 to 70 exits from an M&A standpoint. If you just looked at the data, a lot of them have been in this 60 or 50 to $150 million type of range. So as long as you come in early enough, you can kind of make some of that M&A happen. I think that's one important thing and good learning. I think it's also worthwhile learning from different ecosystems. On the point of exit, I was looking at the Israel ecosystem. And there, every year for the last 5 years, they've had exits of about $5 to $8 billion year after year.
Okay.
And they're spread across 75 different companies. And the learning there was a lot of companies would very early on have conversations with strategics. It could be in business development conversations, and that led to kind of exit. So I think that's probably something which we need to do here collectively as an ecosystem. I think some of the points raised earlier about profitability, working with that in mind, I think it's just going to be important for us to all do together.
Right, so still quite a few exits going on. But when we look at startup investing, sometimes you want that 100x, 20 and above kind of multiple, right? But so maybe that can release some of the pressure in the market. When we look at the public markets and the LPs kind of investing in the private space, they might be a little bit overbalanced right now, so capital costs can be tricky. And Rohit, how are you balancing this? How are VCs balancing this, not knowing how long that pressure in the market is going to last?
Look, I think, I'm sharing how we think about these things, and we think there are a few things that are under our control. And then there are lots of things out in the world, from IPOs and how markets trade, how economies do, that are not really under our control, or we can think about them, but we can't do very much about them. So what we can do is that we can continue to focus on finding the most needle-moving companies in the region and be an enabler, be a partner to them. And from an LP standpoint, it is correct that many LPs are a little bit over-skewed on the private pockets of their endowments and investments, or the pools of capital that they're managing. But I think, the balance is starting to come back, because the public markets, year to date, I don't follow NASDAQ everyday basis, but it's up like 40%, 35% year to date, and private investing has been slow. So, that balance is starting to come back and creep back up. I also think that quality of capital is very important and should be important for both GPs like us and for founders. And what I mean by that is that pools of capital that are committed to a region or committed to a strategy often endure these cycles. So, for example, we have a dedicated fund for Southeast Asia, and we look to invest this fund in this region, irrespective of the vintages. But if we are opportunistically targeting a market when the home or the core strategy is overheated, very expensive, we go out, look for more opportunistic ideas, and then, as the core market or the core strategy gets stress tested and so on, we go back to focusing on it. So I think, that's the capital which is cycling through the market. That's the capital which I guess is what we feel as, there's so much lesser investment. But I think all the domestic funds, the funds that are focused and dedicated to the region, have enlarged their funds. They're continuing to invest. For us, we've been investing over the last 12 months at roughly about the same pace as we would average on a long-term basis. 2021, 2020 were aberrations, but on a smooth trend line, I think we are there, and we'll look to continue scaling along that trend.
Amazing. So it's back to basics, looking for creative, resourceful, adaptable founders. Okay, we're running out of time a bit, so I just want to end off the panel with a more reflective question. What are you guys most excited about in this region over the next 5 to 10 years? Maybe Rohit, we can start with you, then go down the line.
I think I'm most excited about the combination that this region presents in terms of the population and the GDP per capita, and therefore, the affordability that the region has for consumer goods, consumer opportunities. When that consumer cycle starts to move, it manifests itself in financial services applications, because you need you need a card, you need some form of payment to be able to transact. So I think those are two opportunities for the region that we are very bullish on, that we are continuing to look for the next wave and the next ideas in consumer goods and consumer brands, consumer platforms, and same for fintech.
Yeah, I completely agree. I think this region, if you take a 10-year and beyond view, very exciting kind of market, very exciting demographics, I think adoption of tech, that's probably kind of best in the world. Sitting here in Indonesia, the 3.8 hours per day per person, that's kind of top of the charts across. If you look at digitization as an economy, you've seen markets again like Indonesia, other markets in Southeast Asia. It's in the top 30 of all economies globally. I think even right now, while the global economy is having tough times across the board and inflation, I think some of the markets here are actually handling it quite well. Vietnam could benefit from the manufacturing China plus one, Indonesia with its young demographics. I think lots of exciting things. In addition, what is exciting is entrepreneur maturity. So you're seeing some of the entrepreneurs have gone through a few cycles, very strong founders. Probably one of the best times to be, I know it sounds crazy to say, but one of the best times to be an entrepreneur here in Asia. It's just going to be an interesting time. Really strong companies will come out of this time. And I think it's the ecosystem as well, right? We were talking even yesterday evening with Carmen and with myself, like how the ecosystem comes together, how investors kind of come together. We work with entrepreneurs to help them go to the next stage. So I think the next 10 years are the best is yet to come. Of course, it's short term, it's choppy, but that's choppy all over the world.
Yeah.
Yep. I'm very excited that we have a very young generation, very young population in our region, highly adaptable to learning. And also we are seeing a lot more people returning to Southeast Asia after having years of experience in wherever technology hubs. So we've got massive amounts of money in this region. So money is there, youth is there, technology people is there. What we need is discipline in terms of how they value their companies, in terms of how quickly they burn their monies, and in having founders as well as investors work hand in hand to ensure that every value is reasonable, so that we don't have to suffer massive layoff and rewrite off investments. Our LP says this investment vehicle or this asset class doesn't suit us, we will be in trouble. So to me, there's a lot of things that's great in this region. We just need to know how to play the game well.